Good morning, everybody, and welcome to 2023 Santander's Investor Day. I am Begoña Morenés, Global Head of Investor Relations for Santander. I want to thank first all of you who have come to London to be here with us. Welcome. And of course, all of you who are following this event online. It's been 4 years since we had the last Investor Day, and a lot has happened since then. The world is definitely a different place. I am honored to introduce to you our top management who will be leading today's Investor Day. Ms. Ana Botín, our Executive Chair, Mr. Héctor Grisi, our new Group CEO, who took over José Antonio's place on January 1st, and Mr. José García Cantera, our CFO. But above all, I'm terribly excited with the strategy, our plan, and the financial targets for the next 3 years that we are about to detail in the next coming hours. A couple of things on logistics, as always. We're going to have a presentation by our Executive Chair, followed by a presentation by our CEO. We will then have a 30-minute break. I'll let you know when. And then when we come back, we'll have the presentation by our CFO, and we will open the floor for an extended Q&A session for all the questions you may have. We will end the day with a standing lunch downstairs. All 3 presentations will be sent to the CNMV and published some minutes before they start. But to make everybody's life easy, you already have a press release, which I've seen some analysts refer to on their morning notes, in the form of a relevant fact at the Spanish CNMV, and it contains all of the key highlights and the key targets of today's event. A recording of today's event will be available in our corporate website at the end of the day. Without further ado, let me leave you with Ms. Ana Botín. Ana, the floor is yours.
Thank you, Begoña, and welcome everybody. It's a huge pleasure to see everybody in person again. And indeed, thank you for joining us in this Investor Day. As Begoña said, indeed, it's a very, very different world to when we last met. And I think what's important to start saying is that we delivered on our commitments made in 2019. We again in 22 delivered on our guidance for the year, delivering record profitability, at the same time that we further expanded our commercial reach. So today marks a new beginning for Santander. We set new ambitions. We're entering a new phase of sustainable and higher shareholder value creation. And for the first time ever, we're aiming to deliver double-digit TNAV per share and dividend per share on average through the cycle. And to deliver on this 3-year plan, here's how we think about our capital allocation and value creation, which of course starts on the left, aiming to maintain a 12% CET1 or above on a fully loaded basis for the next 3 years. We will maintain and even increase our disciplined capital allocation, will allow us to meet our profitability targets. As you can see, our aim is to be at 85% of our RWAs to return more than the cost of equity, and we will continue to invest for the 15%, again, with discipline. Finally, we'll continue, and thanks to this rigorous capital allocation, to deliver higher profitability, and we're targeting a 15 to 17 ROTE for the next 3 years. As you know, already for 23, above 15%. This will result in us being able to return more of our profits to you, our shareholders. We will continue with the half cash, half buybacks. We will increase our payout ratio to 50% already in 23. And very importantly, I want to stress that at current levels, the board and we all consider buybacks a highly accretive way to generate shareholder value. So how are we going to do this? This is really the question why you're all here today. Well, we're going to do it as we've done it for the last few years, but doubling down on what is a unique combination that few others can replicate, which is our local leadership and scale with our global scale and network. It's a key competitive advantage globally. It's a virtuous circle of mutually reinforcing value creation between our in-market scale and our global scale. And of course, we've shown already in the last few years, and we gave some numbers in our annual results, how this is already happening, how the global and network businesses already account for 30% of our total revenues and 50% of group profits. In the years ahead, it is again the scale of Santander, the network of Santander, that will help accelerate the profitability of our local banks. These global businesses will add more to profitability proportionately, helping us achieve our aim of being the most profitable at the local level. The CEO will cover in more detail our plans. So this is going back 8 years, but I think it's important, as many of you who invest for others show your track record. Well, this is our track record. I always say, look at the numbers. The numbers are clear. Why are we confident we can deliver? Because we have delivered in the past. Our unique business model works. We have delivered consistent growth, consistent improving profitability, increasing capital and shareholder remuneration, yes, including in cash dividends. 2014, we paid about $1 billion to shareholders, to return to shareholders. This year, we're going to return close to 3.8. So I'm not going to go through the numbers, but please take some time to look at this, and especially the consistency, the step-by-step. Just as an example, we had CET1 at 8.3. We're above 12. But I'd like to make 2 additional points. One is that as we deliver these numbers, we have continued to build strong foundations. That's why we can tell you today we'll continue to grow profitably, not just in the next 3 years, but into the future. Again, the change in the operating model in these global businesses has changed, but it has not changed throughout the bank, and the CEO will cover where we see the biggest opportunity. Again, we have invested to make this happen in the last few years. And second, of course, is that on top of what's behind these numbers is negative rates, COVID. Remember, we're a retail commercial bank. We give loans disproportionately compared to our peers, and so we were more affected than others. So again, if we did this in those 5 years, just imagine what we can do in the next period. So I'm not going to go over this, but I wanted to keep it here for the record. This is our Investor Day in 2019. We said medium term. We have delivered on our targets, again, while investing for the future. Again, 22, we covered this already, but I want to say that we also received approval, and will be, actually we announced today, that we will do our second buyback. I want to stress that since November 21, and by the time we finish this buyback, we will have bought back somewhere, depends on the share price, of course, 6 to 7% of our shares. So we're here today to talk about the future, and I just want to make sure that I show what doesn't change. We still aim to be a bank that helps people and businesses prosper. We want to be different from other banks by being simple and personal and fair in all we do for all our stakeholders. We've made a lot of progress, but believe me, there is much more we can do. And we will continue our journey to be the best open financial services platform, delivering in a responsible way, earning the lasting loyalty of our people, customers, shareholders, and communities. So as I've said before, our results prove our business model works. And this is the basics of, or the foundations from which we will build also to the future. This business model, these competitive advantages, give us both a cost advantage and a revenue advantage on a sustainable basis. In terms of customer focus, we have increased our customer base, we've deepened relationships. In terms of scale, we will further rely on the power of the scale of the Santander Group, our network businesses, but also, and very importantly, this is part of what will allow our local banks to deliver higher profitability. And last but not least, our diversification by type of business. This is something that sometimes gets overlooked. It's not just geography, it's types of businesses which gives us that performance over 8 years, and actually more than that, that you have seen before. And it's proven to be a key competitive advantage in the 2008 financial crisis, in COVID, in 2012 with the euro crisis. And we believe that this is one of the key reasons why we sustainably or currently come out as one of the best, if not the best, under stress by the ECB. So how are we going to deliver this? So the new phase of profitability and growth will be underpinned by 3 clear action lines. You can see here how we think about the future. This is about a digital bank with branches powered by the Santander network. The CEO will give more details on what is behind this, and I just want to say there are specific, concrete plans to deliver on these numbers. But I just want to sum this up in 3 big ideas, which is first, we have about 160 million retail customers where we have a lot of upside. We're making 100% of our products and services available to our customers on our websites, on our apps, in our branches, and throughout the bank. And we will think about the branches as a powerful combination or complement to our fully automated offering, which is what we call a digital bank. And we'll see the impact of this on both revenues and in cost. Second, leveraging the group network to accelerate the growth of our local businesses. And linked to this, and third and very important, we are going global with our single software and best practices, as I described, for individual customers. We have developed software solutions to automate front and back office of our retail banks. I'll comment that later. We're deploying the same software, which is proprietary, which powers Openbank, serves more than 2 million customers in 5 countries, and works. It works in terms of cost and revenues. And of course, together with the front end, we also have our own back end called Gravity, our new core banking software. It operates on both private and public cloud. It is already, same as Openbank, implemented and serving customers in our UK bank. And the Santander banks in Mexico, US, and Spain will be the first wave, again, the focus of the One transformation that the CEO will get into later. This approach, together with a disciplined approach to capital, as you can see in the slide, and I covered earlier on more financial terms, is what will allow us to create and accelerate value for you, our shareholders. And these are the cornerstones of our value creation model. Our product offering and services will meet the evolving needs and expectations of our customers, which increasingly want us, and it is the right thing to do, to focus, but very importantly, to embed ESG practices into our day-to-day. And that is exactly what we're doing, we have done, and continue to do. It is very importantly not just the right thing, but it's a very important and significant growth opportunity. So we'll continue to deliver on our green finance targets. We will remain, and we aim to remain, a global leader in renewables. We're number 2 worldwide. In wealth management, we'll deliver, and we aim to deliver, on the 100 billion in socially responsible investments, and we'll continue to look to ways to financially empower people. I just want to remind you that in 2019, we set a goal of empowering 10 million people. We reached that goal in 2022. We're increasing that to 15 million people across our group. And of course, we are going to continue to support higher education. As you know, we have a leading universities program, which helps us in many different ways across our group. We're working with 1,300 universities and gave 266,000 scholarships last year. So, to be leaders in profitability, again, we're going to focus on how can we leverage both our in-market and global scale. We aspire to be the best in-market bank in terms of profitability. This is where our scale comes in. We have one of the largest customer bases in the world. We aim to reach 200 million by the end of the period. That's a big acceleration. Importantly, we're also focusing on active customers, where we are around 99, let's say 100, to 125. And there's a direct correlation, of course, between this number and transactionality. As you can see in number of cards, we also have global scale. We're aiming to go to 115, 120. This is a huge increase, and this is what's going to drive the top-line revenue growth also. So let me just briefly cover our 2 global businesses and what we call our 2 network businesses, which are in a, let's say, less developed stage. So in this new phase, as I said, our global and network businesses will continue contributing to revenues in a different way. SCIB and Wealth Management will contribute more to profitability than revenues. We're still aiming in SCIB, as you can see, to grow. And this is network collaboration. So this is the part of revenues that is actually only possible because we are a group. So that 10% is on top of a 33% increase last year. What's important is that our SEIB model is very unique. It's unique because we have actually the combination of the in-market and the global scale. Our global factories or centers of expertise allow us to deliver transactional cash management, supply finance products. Our global platform exists already. It is working. This is one of the big achievements. So it's an 80% global platform built once across all our markets. This is one of the reasons that we have an efficiency level way ahead of our peers. Our SEIB has a 39% cost income in 22 compared to 59 for our peers. We have plans to further capitalize on this model, both on coverage and product factories, and we will focus only on those things where we're very good at: energy transition, infrastructure, project finance, or trade finance, for example. If you look at wealth management, again, this is an area we structured in this way, I think it's 5 years ago. We've made a lot of progress. There's a lot more upside here in the next few years. We're leaders in the corridors of LATAM, North America, and Europe. 51 billion of our AUMs in private banking, that's 21% of the total, were due again to our global network. As you can see in the bottom of the slide, 10% growth is what we expect in the what we call network AUMs, i.e. those revenues that are only possible because we're a group. In asset management, we also specialize in our core strengths, and we centrally manage already, and we'll do more of this, 60% of the European countries' AUM. And again, insurance is a very important contributor in terms of our individuals. Our regional joint ventures have the scale of 21 million customers, which again gives us a cost advantage. We have a combined ratio of 70% compared to 90% for our peers. And again, 10% CAGR in the network AUMs in private banking. So one of the big upsides for the next 3 years and beyond is payments. As you know, 2 years ago, we created PagoNxt. We're talking here about payments, PagoNxt plus global cards.